In this video, I will show you how to analyze a balance sheet in 5 minutes. Let's start the timer right now. So, I have an annual report just here for Pool Corp. They sell swimming pool equipment in the US, and I'm in the annual report. I'm interested in the company. Okay, what do I look for with all these lines? What is important? How do I know if a balance sheet is healthy or not? You want to check two things: the amount of cash, the amount of debt. Okay, with all these lines, you want to check the cash first. This is here in the asset category: current assets, so short-term assets, cash and cash equivalents. The amount is $68 million as of December 31, 2023. Okay, very well. You know the amount of cash. And they say cash and cash equivalents. Cash equivalents are like cash. That's short-term instruments that you can sell within 3 months. So this is very liquid investments. So this is cash equivalent to a cash. So they put one line of cash and cash equivalent, the amount of liquidity you have in the short term. Okay, now you want to check the debt level. You have two lines for short-term debt and long-term debt. So long-term debt, this is in plain English. Long-term debt is written here in the liabilities section. So long-term debt, you have $1 billion of long-term debt. Now for the short-term debt, you look for short-term borrowings and current portion of long-term debt worth $38 million. So it will depend, the wording will depend on every annual report, every company. It can be called short-term borrowings, short-term debt, current portion of debt, I don't know, the different words, but it's quite simple. You have long-term debt and short-term debt. You do the addition of these two numbers and you have the total debt of the company. So you can compare the total amount of cash, which is not a lot of cash for Pool Corp, and the debt, over $1 billion. Okay. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of this video. Now you can compare this. The second thing to check in a balance sheet is the current ratio. It's very simple. You take the current assets divided by the current liabilities. So short-term assets divided by short-term liabilities. In order to, that's a metric to know the short-term liquidity of a company. So the assets are what the company owns, what the company has. The inventory, the cash, the receivables, the goodwill, the property, the equipment, the machinery, etc. You want to check the current assets. So that's short-term assets. That's assets that you can sell within 1 year. So short-term stuff, cash, inventory, receivables, all these things. And this is a line here. There is a line, total current liabilities of $1.8 billion. Okay, short-term assets. And you want to divide this by current liabilities. So accounts payable, short-term debt, accrued expenses, or the short-term liabilities, short-term debt, short-term lines that you own to somebody else and you have to pay this money within 1 year. So total current liabilities of almost $800 million. You divide 1.8 by $800 million and you get a ratio. This is higher than 1. You want the current ratio to be higher than 1. And I have a website for you for free if you want to avoid this calculation. This website is called Guru Focus. That's one of the best websites regarding finance. And I just typed Pool Corp. I'm here in the free website, by the way. You can check all the metrics, but what is important for the balance sheet is here. I mean, you don't even have to look on the annual report. There is a chart here with the amount of cash and the amount of debt. So you can check the cash level over time, and we have the same number, about 60 million of cash, the same number that we have found in the annual report, and you have the debt here, like over $1 billion. That's it. This will not be exactly the same number because there are some adjustments, but you can get a rough idea of if the company has a lot of cash or a lot of debt. In this company, for Pool Corp, they don't have a lot of cash, they have a lot of debt. And actually, for the current ratio, you don't even have to calculate it. It's here. Liquidity ratios, current ratios, 2.48. That's it. You have it. This is how you can check in 5 minutes how a balance sheet is healthy or not, to see if a company is healthy or not. if they have a lot of cash, a lot of debt. And that's it. If you like this content, I have an investing coaching program to make you a better investor. In this coaching program, you will learn a complete investing process. You will learn how to find stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. So what comes with the coaching program? You will get access to an exclusive community of like-minded investors, and you will get my personal guidance to help you build the portfolio of your dream so that you can have long-term results with your stock portfolio. Click the first link in the description to get more information. You will get a 10-minute video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.